There's a question here on the screen. The following information is available for the market company. The details are net income $10, dividend is 2, earnings retained is 8, equity book value 90, market value of earnings retained 8, share price is 2, and number of shares are 100. The question asks us to find out what is the return on shareholders' investment. So, from the shareholders' point of view, if we were to calculate the return, what is the return on stockholders' investment? Now, to understand this, first we need to look at one formula called as holding period return. So, it's there on the screen. Please look into that. Any amount of investment which this shareholder invests now, that is beginning value, the investment that is made now, as against that, there are two things which the shareholder will benefit. One benefit is from the net income which he earns. Another thing is the capital gain, the difference between the ending value and the beginning value. So if at all, if there is any value of the or any benefit he receives from investing into a stock, that will be his capital gain. Okay. Let's look into the details. What is the price the shareholder invests as on today? The shareholder's price is $2. Share price, we see it is $2. Done. After that, the number of shares are 100. So, altogether, the investment of the shareholder would be 100 into 2. So, we see shareholders' investment will be 2 into 100, which is equal to $200. If the shareholder invests $200, as against that, what is the shareholder going to receive at the end of the period? So, first is we see that there should be some benefit he receives, and in terms of capital gain and the regular source of income. So, what will he receive? His net income by investing into the shares will be the dividend income. So, for him, dividend is his income. So, dividend is one value, and another value is the market value of earnings retained. Market value of earnings retained, we see that that is given as $8. Market value of earnings retained is $8. So now the dividend income is $2. Market value is $8. Altogether, we see that what is this market value of retained earnings is, see, periodically when there are earnings made by the company, 100% of the earnings are not distributed to the shareholders in the current year. Part of it is retained in the business. When a portion of it is retained, the retained amounts are reinvested in the market. So when they are reinvested in the company and the company makes a profit out of that, so in the market, the value of that retained earnings now stands at $8, which is his benefit because he or they have allowed the profits to be retained in the business. So those retained earnings have earned a value of $8. So that is the shareholder or shareholders benefit. So altogether the total benefit is $2 plus $8. So when we look at that, we see that total benefit is equal to $10. That is 2 plus 8 is 10. So now return on stockholders investment is equal to We see $10 divided by $200. Okay, the entire thing, when we convert that into percentage, so we just multiply the fraction into 100, and that comes out to be 5%. So in this case, option A is the right answer. We see option A is the right answer. $5% is the answer. Hope this explanation is clear.